Hello guys, welcome back to another section. It's week 2 of the beginners class, right? And today we are going to be talking about technical analysis basis. And before then, I'm going to be talking about the types of charts we have, right? So we have different types of chart, and as you can see, these are the types of charts we have. But the most common ones is the candlestick chart, line chart, and the halo candle. Right? Those are the most common used by traders, right? And the most common, like the very common one. Okay, I said candlestick, line chart, and bar charts. I mean to say, right? Candlestick, line chart, and bar chart. Where's the bar chart? Let me separate. All right, here's the bar chart. So these are the most common one used by traders, and the most popular one which all traders use is the candlestick chart, right? So let me switch to the line chart right now, so you see how it looks like. As you can see, this is the line chart. It's just a line, right? So it does not give much details. All right, and here's the bar chart. As you can see, here's the bar chart, right? It gives a little details, right, but not much compared to the popular one, which is known as the candlestick chart. This candlestick chart gives much details. It helps you read the market. It helps you understand what's about to happen based on past uh, history of the market. You understand? So we are going to be talking about this candlestick chart. Let me just explain a little bit about it, right? So, guys, this is the candlestick chart, and as you can see, this area right here is the time frame, right? So currently, this chart is on the 30-minute time frame, and each candle on this 30-minute time frame represents 30 minutes, right? Each candle. So it takes each candle 30 minutes to form, right? That's because this chart is currently on 30 minutes time frame. We have different type of time frame right here, from the monthly, weekly, daily, 4 hour, 1 hour, 30 minutes, 15 minutes, 5 minutes, 1 minute, and so on and so forth. You have the seconds, right? But I'm not on the premium on trading view. I can switch to those lower time frame. But right now we are on the 30-minute time frame. I can switch to the 1 hour time frame right here. As you can see, this is the 1 hour time frame. On this 1 hour time frame, each candle right here takes 1 hour to form. Each candle takes 1 hour to form. If you go to the 4 hour time frame, same thing. Each candle on this 4 hour time frame takes 4 hours to form. Same thing with the daily time frame, as you can see. Each candle right here takes a day to form, right? Each candle right here takes a day to form, so on and so forth. Same with the weekly, the monthly, and even the yearly time frame, right? It takes that particular time to form on that particular time frame. So that's it about the candlestick. All right. So now let's head to the technical analysis, right? Technical analysis. So let me just give a short description of the line charts, bar chart, and candlestick chart. Line charts show price movement over time, simple and easy to interpret. Bar chart display open, high, low, and close price for each time period, while the candlestick charts show price movement in a visually appealing format, with each candle representing price action over a specific time frame, like what I just said, right? So the 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 candlestick the candlestick the candlestick so the candlestick, as you can see, they have a bullish candle and a bearish candle. A green candle indicates a price increase, while the red candle indicates the price decrease. The color of my candle is different, and the color of my candle is different. So let me quickly change that. Just quickly change that so you understand it much better. This is how it's supposed to look like. Sorry. This is how a normal candle is supposed to look like, right? The green and red. So the green candle represents the bullish, and the red candle represents the bearish. What's bullish? Bullish is when price is going upward, right? While bearish is when the price is coming downward, right? So a green candle represents the bullish, and the red candle represents the decrease, right? Different periods can be selected for charts such as 1 minute time frame, daily, and weekly based on trading style, right? So based on your trading style, if you're a scalper, there are types of different types of trader based on your trading style. Or like I said, some people do day trading, some people do swing trading, just depending on your trading style. For instance, you have other jobs you're doing, and you cannot be on the chart always. So you just do your analysis, take your trade, and leave the trade to play out. Then to go do other things and allow your trade run. Those kind of traders that do such is called swing traders. To allow a trade run for a long period of time, they are called swing traders. Right? We have the day trader, we have the swing traders, we have the scalpers. Scalpers, they just come into the market, look for opportunity, take trade. After a few minutes, they close their trade, they are done. But they take multiple trades a day. They are always glued to the system, right? They're always glued to their chart to look for opportunities. They take like 5 to 6 trades a day. Why a day trader come into the market, look for opportunity just to take that opportunity for that day. Just a trade, probably a trade for that day. That's a day trader for you, and they close that trade before the end of that day. Why swing trader holds trade for more than 2 days, or even up to a week, right? Swing traders hold trades even up to a week, right? Why? We also have position traders. Those traders hold trades for more than weeks, even up to a month, right? So those are the types of traders we have, and depending on the type of trader you are, that's the time frame you use depends on the type of trader you are, right? So if you're using lower time frames like 1 minute, 5 minutes, those time frames are for scalpers, right? Why the day traders, you can see they use the 4 hour, 1 hour, 30 minutes. Why the swing traders use the weekly, daily, sometimes the monthly time frame. Why the swing the position traders look at monthly time frame and probably the yearly time frame, right? So those are the types of trader we have. All right, still on candlestick. Now I'm going to be showing you the types of candlestick patterns we have. Right, we have the engulfing bar candle, the dodgy candle pattern, the dragonfly dodgy, the gravestone dodgy, the morning star, the evening star, the hammer, the shooting star, the harambee, and the tweezer tops. Right, so those are the types of candlestick pattern. These are candlestick patterns you need to familiarize yourself with. Like you need to get like you need to study them and know what they do, how they work, right? And also I'm using this the candlestick trading bible. This book I wanted to sell it, but since you are part of this beginners class, I'm going to be giving this book for free. All right, so those are the types of candlestick patterns we have. So I'm going to be dropping this book in the group so that you get used to the candlestick. Just study it and get used to candlestick patterns, right? I'm going to be dropping the book in the group for free. So do well to study to understand the candlestick patterns. All right. So once you study this and understand candlestick patterns, you see that to identify those patterns will be easy for you in the chart. So right now I'll be moving on to the next topic. Now I'm going to be talking about technical analysis. Please note we have 3 types of analysis, right? We have the technical analysis, we have the fundamental analysis, and we also have the sentiment analysis, as you can see right here. Technical analysis, fundamental analysis, and sentiment analysis, right? All right. We are going to be focused more on the technical analysis because that's the most common analysis used by traders. Some people use the fundamental. Some also use fundamental, but fundamental is very volatile. Let me put it that way, right? Fundamental involves the news trading, involves the economic, what's going on in the country. Fundamental analysis examine the economic and political factors that sway currency value. It involves scrutinizing economic indicators, central banks, policies, and geopolitical events. This method is favored by those with a big picture perspective who believe in understanding the underlying forces that drives the market. All right. And also sentiment analysis. This fundamental analysis involves news trading, right? And it's kind of volatile. So we are going to be focusing on technical analysis because that's the most common. That's what you are going to be learning. Let me talk about the sentiment analysis. Sentiment analysis gauges the prevailing mood of the market. It looks for ways to understand current trader emotion and how various market participants are positioned. The, con- the contrarian approach seeks to capitalize on extreme sentiment level, anticipating markets. This this sentiment analysis is based on sentiments like other traders, like you might be seeing other traders on social media just based on their own sentiments, based on their own analysis. You can do your own analysis based on their own analysis, like following their own analysis, right? That's what we call sentiment analysis. But right now we are going to be talking about the technical analysis. Technical analysis at its core is the study of price, charts, and patterns. It operates under the premise that historical price action can offer clue to future movement. Traders utilize various tools applied to price charts, such as trend lines, moving average, and other technical indicators to identify potential entries and exit points. Right. So, technical analysis is based on history, right? It's based on history. For like as you see on our chart right here, if you want to do technical analysis, it's based on past price action. What has happened in the past, that's what you use to determine what is going to happen in the future. All right, that's what is used to determine what will happen in the future. So what are those things? What are those things that determine what will happen in the future? So right now we have support and resistance. We have chart patterns, right? Chart patterns, support and resistance. They are price levels that the market struggles to break through, indicating, okay, they are price levels that the market struggles to break through, indicating potential reversal points. All right, those are the levels that market through struggles to break through, indicating potential reversals. Okay, so let me identify the support and resistance in this chart. All right, this is my chart on the 15 minutes time frame. All right, let me go to the 30-minute time frame. So now I'm going to identify some support and resistance level. This level right here, this level right here is a resistance level. This level right here is a resistance level. As you can see, price came to this level, came down, and came back inside this level, failing to break above, right? So it's a strong level. Price is failing to break through. So now you can call this a resistance level. Now price has broken that level. As price broke that level, it's now a support level. What is support? What is resistance? Resistance is the one above, right? It's just like a ceiling. If you throw something up, trying to pass through a ceiling, maybe you throw an object up to a ceiling, right? It's not going to pass through that ceiling because that ceiling is going to be resisting it from passing through. If it is something very heavy, or let me say very strong, that can break through that ceiling, it's going to break it through and pass through the ceiling, right? So that's what resistance is. It's a price. It's kind of a price area where price fails to break maybe twice or three times, right? It fails to break it and then probably later breaks it. Also, support is just like a floor. It's just like a floor level, right? Where price is failing to break below. I'm trying to look for a very good example of support level and resistance level. So support is just like a floor level, right? Okay, this support level, as you can see, price fails to break this level. Price came into this level first time, went above and come back into the level. It didn't break it. Now it's moved upwards. There are so many levels in the market. This is a resistance level. The difference between the resistance and support is that resistance is above while support is below this resistance level. So how can you use this to trade? For instance, let's take for instance now price came to this zone the first time, right? And rejects that zone. Now it came back into this zone, also showing some kind of rejections, right? Now if you are to trade on this level, you're going to buy. You're supposed to buy from this level, right? You're supposed to buy from this level, and when you buy, the price move upward, you make your profit, you make money from that level. Simple as that. Also, there are so many strategies which you can use, but this support and resistance is the basics. You need to know this. So now, as you can see, price was rejecting, like failing to break this resistance right here. When price finally broke the resistance, it came back to act as a support. It came back to act as a support and move move upward, right? Also, at this point, it came back to this area, as you can see, came back to this area and also try to break it to continue below, but as you can see, price just broke it and still broke it above, which is called the fake out. This thing you're seeing right here is a fake out, right? It's just a manipulation by the top traders, like the big market makers, right? They are market makers that manipulates the market. So this is just a fake out to make people think that yes, this has just broke out and it's going to continue downward, but right now it's fake out and come back above this support level. So support and resistance are levels that price fails to break, right? Multiple times, maybe coming to retest it multiple times. That's how you know the support and resistance level. Once price come there more than once, like for instance this one, as you can see, this is the first touch and the second touch. Now you can now consider it as a support, right? Even the resistance, this first touch, second touch, you can now consider it as a resistance level, right? You can now consider that as a resistance level. All right, we also have trend line. It's also support and resistance, but this in the slanting way, right? Trend line. And how can you draw a trend line? As you can see, this is a trend line connecting two peak or trough, connecting two peak or trough together, right? You can see this is a trend line. This is the peak, one, two, connecting it together, like make sure they are touching each other. This is a resistance trend line. This is the support trend line, as you can see right here. This is the support trend line. So this is the trough and this is the peak. The top, the one from the top is the peak and the one from the bottom is the trough. All right. So how can you trade from this? How can you use a trend line to trade? So right now, as you can see, this is the first touch, this is the second touch. Now you can now identify that price has respected this trend line, rejecting it, first, second. So now at the third touch right here, probably price might come back to this side, this area. Price might come back to this area. Price might come back to this area, making it the third touch. Then you can sell from there. Same thing with this support trend line. As you can see, this was the first touch, this was the first touch, this was the second touch, and this was the third touch. I know this was not perfect, but as you can see, at the third touch, price came to this line and rejected it and moved upward. If you are if you are to trade from this point, you're supposed to buy this pair from this point, and as you can see, you are going to make profit from it. If you were to buy from this point, you are going to make profit. So same thing with this. Price is probably going to come back to this area, making it the third touch and selling from there. So that's how to use the trend line to trade. And trading trend line or trading support and resistance, they are strategies on their own, right? They are strategies on their own. You can choose one, master it, and use it as your strategy. You can master it and use it as your strategy. So that's how to draw trend line. Drawing trend line from the bottom to the top. That's the support trend line. Drawing trend line from the top to the bottom. That's the resistance trend line. And this is called the peak. This is called the peak. You see, this is called the peak. This is called the trough. Sorry, this is called the peak. This one is called the peak. Probably it can come here later, but this is called the peak. As you can see, this area is also called the peak. All right. So that's how to draw. This is the trough. That's how to draw trend line. Let me see if I can find another. This is called the trough. If you can identify the trough and peak, then you connect them together. It should be more than 2 dots, right? So right here now, I'm going to connect this together. As you can see, make sure they are touching each other. This is also called the trough. It's just to join the trough and the peak together, right? Just to join the troughs together and join the peaks together. That's how to identify trend line. As you can see right here, this is called the trough, trough, trough. I'm going to join them together. As you can see, I just joined them together and I got a trend line. That's how to draw a trend line. And note, even if you are trying to join them together, all the trough or peak mustn't be joined together, right? You must not connect all together. Some might not be able to connect, right? So you just connect the one you are able to connect, but you must connect two together. Then at the third touch, that's where you can take trades from. At the third touch, that's where you can take trades from. All right, so that's it about the trend line.